Okay, well, good morning for most of you, depending upon where you are. And I do apologize for a lot of you. You're probably thinking that we're 30 minutes late, but actually for Devin, we're actually 30 minutes early. Somebody, we don't know who, kind of screwed up the booking schedule. I mean, cross-border ponds, time zones, we'll get you that way. So, yeah. But you know, you guys are all used to it. This is Devin from GYSR. I don't know. Like, do we call you Geyser? Because that's pretty cool.
Yeah, we go by Geyser.
Okay, great. And you guys are a DeFi platform based on Ethereum and Polygon. So I'm excited to dive in to all of this. I used to sit on some DeFi DACs in the EOS ecosystem space and involved with a couple other projects. And so I'm excited to kind of see what you guys are doing and the differentiation between, you know, Polygon and Ethereum really too, because you guys are based on both. So yeah, if you could give us a quick introduction. Who are you? What do you do? And what is Geyser?
Sure. So my name is Devin. I'm one of the co-founders of Geyser. We launched Geyser back in 2020, kind of in the boom towards the end of DeFi summer. And you know, one of the patterns that emerged was a lot of projects using incentive structures to motivate an early community. So, you know, there was, you know, started with synthetics and a few other projects that were launching liquidity mining pools and, you know, rewards for the early users, et cetera, et cetera. And I think broadly as a theme across DeFi and in crypto, there's a pretty huge gap and need for tooling. You know, those layers that projects can just lean on and use instead of having to build the ground up. So we specifically looked at tooling for that whole incentives area that other projects can use. And we built out a platform in that space. So you know, we call ourselves a platform for on-chain incentives, but you know, in more natural terms, we're a launch pad where you can go on with zero code and launch a new incentive structure and reward your community for doing some healthy action. So yeah, we're live on both mainnet, we're live on Polygon, seeing a lot of activity on both, and continuing to build and trying to provide more tools for projects out in the DeFi, NFT, crypto ecosystem.
So for those that might not know, because I think like a lot of people know kind of the catchphrase DeFi and what it is, but like some people might not really know what the advantages to DeFi is, decentralized finance, and why it's important.
Sure. So one interesting thing is I think the answers you get on why DeFi matters, and I'll define it in a second, but depends a lot on where you live. Like where, you know, everyone in the world has very differing degrees of access to financial structures and financial tools. But DeFi is a concept, is decentralized finance. You know, we traditionally have relied on centralized institutions and parties to be the brokers and custodians of a lot of financial things we do, be it investing, be it savings, checking, what have you. If it's a you know, an agreement between two parties, taking out a loan. For some folks in the world, that's super, super easy to get access to. But you're still relying on some central party that you have to trust and might take arbitrarily large fees, might end up, you know, there's obviously a lot of political stuff going on in the financial world right now as well. DeFi gives you a way to decentralize that trust layer, but still achieve a lot of the same financial tools. Now, in other parts of the world that might not have, you know, might not have even had access to some of those trading platforms in the first place, or some of those lending platforms in the first place, it's even more exciting. It's not just a shift of trust. You're actually getting access to things and markets and capabilities that you never even had before. So it's kind of a pretty large paradigm shift as far as access and availability to financial tools.
Yeah, so like most people who follow us on our channel know that like I'm based in Asia. You know, I have family that lives in China, and I live, you know, in Japan, and I'm Canadian originally. And it's interesting because, you know, we're plugged into a lot of a lot of the news globally because of that. And you know, the scare in China is always that, you know, a lot of the people who protest are against the government occupying their spaces, their bank accounts can be locked, and there's, you know, biometrics and things that are being, you know, put in place in certain areas where you can't even get into bank machines unless, you know, these certain conditions are met. And what's funny about that to me is we look at what happened, you know, in Canada a couple of weeks ago, or, you know, with the whole protest, and the government basically saying, yeah, like we're going to start locking people's bank accounts if you're protesting. Now, of course, like we don't have a constitution in Canada, so this isn't against the constitution. If you're American and you're going to shout from the high hills, that's all we have. We're based on a different thing, right? But like, even I think if you don't even agree with the truckers, then you can see the problematic ideas in this, where people can just come in and lock your bank accounts. And like, I think it's really important, like, to understand the second aspect that you kind of touched on as well, which was like, there are places in the world which don't actually have a physical infrastructure for people to be able to do this, right? And so like with the internet, with blockchain, it allows for that almost first coming of them to have these first world services that we've become accustomed to, like, right? And if you're in the States, or you're in Australia or Canada, or most of these first, you know, world countries, you know, we take for granted that these are going to be okay, and they're going to be there 99% of the time. But there are cases such as Argentina, you know, back in the day, or these other countries where the whole system has collapsed and failed, and people have been locked out. And the idea is that if you're immersed in a DeFi platform, that you own 100% control of your own assets, if it's a real DeFi platform, because well, let's just say my account got blacklisted on a DeFi platform, which isn't really decentralized, but that's a whole nother story for a whole nother level that will come out very soon. But I want to ask you one thing, because I think that this is important. So I think probably of all the blockchains that I'm aware of, Ethereum based DeFi is probably the most decentralized. If we look at DeFi on EOS, for example, you get 15 out of 21 block producers that are able to actually, you know, stop a hacker from moving funds from beyond the wallet that it got hacked. And I don't think that there's a way to do this in Ethereum, right? So my question is, what are the benefits and the disadvantages to building a DeFi platform like what you guys have put together on Ethereum?
So you're absolutely right. Decentralization on Ethereum is most likely, and I'm sure there are folks who will come and argue against any point of view, but I would say Ethereum is by far the most decentralized and the most secure in that regard. Part of that is that the compute requirements to run a node are fairly reasonable. You know, anyone with a desktop can participate. Now, the downside of that is that you have a huge number of computers that are accepting some lower requirements for compute capabilities that all need to run your calculations. So you get a lot of guarantees on security, but you end up paying a lot in gas fees. So that's, I think, the major downside: congestion on the network. It's actually fairly low right now. Ethereum's breathing. I'm taking a step back and a breath for the first time in a while with gas fees.
Right.
On the other end, you have, you know, platforms that make trade-offs in terms of block size, in terms of you know, the actual like time between blocks, complexity, things like that. And you get slightly lower gas fees. You are giving up a little bit in terms of security, which might be okay for some applications. I think that at the end of the day, you know, that there's the multi-blockchain thesis where every application is different. You know, you have, there's kind of a future vision where Ethereum becomes this massive settlement layer where all value and all records are written back to. And you write proofs, and you do zero knowledge stuff, and you write all of these core pieces of information that need to be held as ground truth across the world back to Ethereum. But your application layer lives elsewhere. It lives in Starkware doing, you know, roll-up applications. It lives in Polygon, the side chain. It lives on, Optimism and Arbitrum. And then everything settles back to Ethereum just as a bookkeeping measure, and then goes back out for more application and execution. So we support both. I think we acknowledge that a lot of applications have different needs, so we try to understand where builders are so that we can provide tools to them at that layer.
So I guess so I have a bias here too, right? Like, I think that like my one concern is, could we ever go into mainstream business and occupy all of the brick and mortar businesses and get them on the blockchain with a blockchain like Ethereum that hacks can't really be pulled back. It's so on that side. On the other side is if we go full on, decentralization when it comes to DeFi, right? Like, yeah, I don't know. I think it's going to be really hard to swing these already existent, corporations in there. But I also think it's equally as hard to bring people from Ethereum knowing or saying, understanding that they're the most decentralized in a lot of people's minds, to a blockchain like EOS, for example, that has the ability to, prevent hacks and things like that. And so for me, it's actually quite interesting to look at the balance. And I think when you bring up the idea that you can go, I think we will be able to go across blockchains in the very near future. And I guess in a way, you guys are already kind of piloting that with the ability to use Polygon, right? So
when we bridge tokens back and forth, there are applications out there today that you can use a bridging system or an Oracle system to literally do almost execution and transactions directly across chain. Bridging is easy. You can start to do swaps, lending, other types of more complex stuff, and stake on one side or ward on Polygon, or do some staking on Ethereum for your core asset, and then some gaming application that exists on Polygon. So those kind of cross-chain solutions are already possible.
Well, it doesn't even necessarily have to be the whole project on one blockchain, right? Because like we're a metaverse, we're based right now on Wax. We're planning on expanding to other blockchains hopefully in the future. But like we're porting into a DAO, and our DAO structure will live on Ethereum, right? And so I think it really depends on what the project wants, and like you said, different blockchains are going to have different benefits. So I actually want to dive into sorry, go ahead. I just want to pull this up so that people can see what we're looking at here. But yeah, go ahead.
Yeah, sure. So one other thing that I would mention when you're talking about that future of even beyond multi-blockchain, that future of average consumers and the everyday person regularly using blockchain as a data layer, I think that a very realistic future is that you kind of have the blockchain existing as this ubiquitous, universal, and agreed upon data layer out in the internet, out in the metaverse. And then you almost have hubs of centralization that exist, like Coinbase, Binance, what other platforms pop up that are super, super user friendly, but they still provide an enforced layer of transparency for those institutions that didn't exist before. So like, for example, if you're, interacting with Compound through Coinbase, it's technically custodied and they're brokering, or they're the proxy for you interacting with that protocol. You might get a 0.2% fee discount, or you're slightly disadvantaged using their service, but you at least have full transparency into what the underlying protocol looks like and can choose to use that directly if you want to roll up your sleeves. So I don't think that's necessarily a bad outcome, and it still achieves a lot of the same forcing functions that decentralization gives you.
Yeah, I guess there's a big difference between, the fact that everyone can see it on the blockchain, the fact that a lot of this code is open source, versus something that's happening on a computer screen in a back office of a bank, right? And so I think that's one of the things that we really need to showcase in the world. Again, if you're living in a lot of these first world countries, I mean, we're kind of minimized from a lot of this damage. We've been lucky, but it doesn't mean it can't happen. I mean, look at that. There was that I forget what it was now, that 6 months ago where there was that big run up in the stock prices, and like the gamers app or whatever. You know the one I'm talking about, right? And GameStop. Everyone, yeah, GameStop. Sorry, I wanted to say Gamers Hype, but it's a project that is owned by a friend of mine, and I knew that was different. But yeah, the GamerStop and things like that, right? Like, and this is like potentially as things like financial woes and inflation and housing prices and stuff like that go up, there might actually be a greater risk for not having decentralized control. Again, I'm hoping that another Argentina won't happen, but it did. And Argentina at the time was, you know, quite an established economy. So anyway, let's not get too far into conspiracy theories or doom and gloom, because we have enough of that in the world already. So you guys have got some pretty decent numbers here. I mean, and like you said, you've been here since 2020. So, you know, 6 million in total locked value, 347 pools, 1.5 billion in transaction volume, and 4,300 unique wallets. So you guys, one of the things that I like about it is you're offering developers a configurable toolkit to facilitate on-chain incentives, liquidity provision, and NFT staking. All right, so if we can dive into this a little bit, I'm really interested in the toolkit, and I'm really interested to how you've actually ported NFT staking into this model.
Sure. So I guess circling back a little bit to before, we want developers to not have to reinvent the wheel every time they launch a project. So every project is building, you know, some combination of new novel things that are within their core focus area and their niche. And then there's always that auxiliary stuff where, oh, we need a vesting schedule. We need to somehow distribute tokens. We need to set up an AMM. Those things you shouldn't need to reinvent. So we're focused on providing an off-the-shelf solution for the incentives part of that reusable tooling. So what that means is, I guess more specifically, let's say that you launch a project and you're a builder or developer, and you need to figure out your distribution model for that token. You might have some portion that's going to vest to the team over 4 years. You might have some portion that's vesting to advisors or investors over 4 years or 2 years, whatever it is. You might have a 50% allocation that you want to distribute to liquidity providers on Uniswap. Maybe another 20% you want to give to liquidity providers on SushiSwap. Pretty simple, basic concept, but we just described 5 different pools that all need their own UIs, they need their own subgraphs, they need their own interface for management, for funding, the audits for those contracts. Don't do any of that. Come to Geyser, launch some pools. You can basically configure things like the distribution period, the staking token, the reward token, any kind of time incentives you want to add. So let's say that you wanted to launch and by the way, for context, just in case anyone's unfamiliar, liquidity mining is basically the idea that for any protocol with a token, you need a automatic market maker, an AMM, that you can trade with. So if I want to swap, you know, my dog token for ETH, I need basically a pool of ETH and dog token that my users in my community can trade against. So you basically incentivize the community to stake and provide that big pool of ETH and dog token, and then anyone can trade against it. So from the Geyser side, you would set up a reward pool that just streams some more dog token to anyone that's providing that liquidity. That LP token is what we usually call it. And that can be a defined schedule over the course of 4 years. So that you can pretty much guarantee that users who are incentivized will take that healthy action and help build up your protocol. And this can be anything. Like, let's say you have a lending protocol where you are trying to launch a new pool. The incentive could be, we're going to stream our project token to any participants, and the staking token could be, the receipt of having participated in that lending pool. Whereas another example, you asked about NFTs. A user can very easily go in, and as of January 5th, early January, we launched NFT staking. They can select a type of pool when they're launching it that is actually an NFT staking and an ERC20 rewards. So if you're a NFT project that is distributing a new governance token to your community, you can basically say, hey, here's our target set of users that we want to distribute this governance token to. Or we have, even on the other hand, it's not even a new token, but we have some basket of fees coming in that we want to distribute to our our community and to our token holders. You set up that NFT staking pool, users come in, stake their NFTs. You can still do all the normal things. You can vote with those NFTs. We have to have a snapshot integration. You can very easily check who the owner is for any kind of gaming use cases. But now it's basically a financialized asset. I think that this is a tangent, but one of the huge gaps in cryptos and as a space is that DeFi and NFTs are still not very connected. They're incredibly valuable and exciting and moving fast in their own rights, but they haven't really crossed over that much. Most NFT projects are NFT projects. Most DeFi projects are DeFi projects. And the two are starting to blend together, but there's so much room for, NFTs become valuable when they're modular, when they're plugged into a larger system, and when they're financialized. When you can take your piece of art and take out a loan against it, it's starting to become possible, but it's a little bit tricky still.
Right.
Suddenly you're unlocking a huge number of use cases that you couldn't do before by representing that certificate of ownership on the blockchain.
Well, and the power to be able to do that. So like people familiar with our channel know, because like we operate mostly on Wax, but with our planet, they kind of did a really good demo version 1, and now they've expanded it to I think the next level really. But even just that demo version that they put together, even like back in the day, was a first of first, whereby you could deposit your NFTs into a contract, and that contract would release a reward that came out just for having those deposited, and people did really well on that. And I mean, the concept was so solid that it actually broke, and so they had to go back and reevaluate it all. Yeah. And now that they've gone back and reevaluated it all, and the pools have had time to balance. And my co-host on this channel, actually, one of the reasons that we wanted to have you on was he's the co-founder of BluDAC, which is basically a liquidity platform on Wax, right? The first one ever to incorporate all of that stuff. So we're really actually quite interested in seeing how all of this works, because we're in kind of the both worlds in a way. I mean, yeah. In the world of DeFi and in the world of NFTs. So actually, you know what? I'm gonna suggest this now. We've got a few more minutes left, but I'm gonna suggest this now. What I would love is maybe in the next week or two, you guys to come back and join us, and actually maybe even give us a walkthrough on how this toolkit works to set up your own system. Because I think, to me, it sounds almost like a plug and play model, and you're right. It's good, right? I don't have to worry about a lot of these problems, whether the contract has been is secure or not. If you scroll down here to the bottom, you'll be able to see all of the verifications that you guys have got. But I also don't have to worry about whether it's truly decentralized. It's a model that's been set up that, from my understanding, that anyone can use at any time, and it's more of a service, right? You've got all of these verified certifications and things like that. So I'd really like to see this in action. So if you're down for it, maybe in the next week or two, you come back and you could walk us through this toolkit side of things.
So a couple more points to touch on. You just got to them there, but I just ranted about the create side. Easy tool, use it, don't reinvent the wheel if you're a developer. From the investor side, we have a whole community of folks that are basically just watching our discover page for new opportunities that pop up. So it's a really good way to just get listed on a platform of DeFi enthusiasts and get access to investors and for investors to find projects. So it's a really cool crossroads for discovery there. And then also from the investor perspective, like you said, safety, you have to do, they obviously, you know, we don't want anyone to trust anyone blindly. They do their diligence, they go through our audits, they see all of our open source code, but you do that once because you only have to trust one single set of contracts from the GYSR platform, and everyone who's launching those is guaranteed to be the exact same contract. Right. We have no backdoors. There's no admin functions to like change things or tweak stuff. It's very much a binding commitment between user and project to distribute something for some period of time. So we think we provide a pretty nice layer of trust and transparency that, you know, projects can lean on and also investors can feel comfortable about.
And again, that code is all open source. So all of those LPs all those LPs that are let out on the other side for people providing liquidity, once they're in your own wallet, they can't be touched. They can't be moved. You own those. I mean, the market could go to shit potentially. Make sure you research what you're doing with things like impermanent loss and stuff like that. But you own those tokens. They can never be taken away from you, which is like a pretty big thing in times of war, in times of pandemics, in times of, you know, the real world basically going to crap. And I mean, even worst case scenario, even if a project, you know, goes to hell, I mean, people are a little bit insane. There's still people trading BitConnect tokens. I don't know why, but they still exist. Don't trade BitConnect tokens. I mean, but like you own them, right? Like, and you get to do what you want to do with them. It's not the bank. It's not another project. It's not you guys. It's all out there. It's all, you know, verified. And I think that this is really important. And not all DeFi projects are like this. So make sure that you do your own research. But what I like about it, as you say, people can do the research and verify the contracts. And then whatever gets released through those contracts, right, they can know that it's all the same. It's all the same blockchain. It's all the same code. It's all the same everything, right? So I think that's really important. So
one thing you mentioned earlier is DeFi projects not really being decentralized. A cool anecdote is, I would say half of our, it's not an anecdote, more of a trend. About half of the pools that launch, we have no idea they're launching. Like, we don't get me wrong, we do a lot of discussions with projects to make them aware of tools, and we answer questions, but it's totally self-serve. We have zero ability to, you know, approve or deny projects. It's a totally open factory. Even the listing through our subgraph is fully automatic. Indexing just turns on when a new pool gets launched. And that's all, again, the subgraph layer is a decentralized tool and approach as well. So we are very hands-off. It's truly an open tool and anyone can use it.
And again, speaking to the testament of decentralization, right? Like as opposed to even in the crypto space, when you look at these centralized exchanges, and people are always wondering, you know, when that liquidity will come from the centralized exchanges. But the you know, the fact of the matter is, from a very real sense, a lot of these centralized exchanges are charging money. And so the ability for somebody on their own terms to be able to come in and be able to launch their own pool and supply that backbone for the economy of the project they're building is really an important aspect too. I mean, it's kind of the blockchain form of crowdsourcing in a sense, right? Like, I mean, you can get your community involved and things like that. So. Cool. Yeah, I'm all right. Well, I'm pretty excited, honestly, just to see how this goes.
Totally. I guess we do two things. Even right now, if you wanted to open up the app, I could point out a few things and we could show like the couple steps that you go through to launch a pool.
Yeah, we can do that.
And alternatively, I can also hit web app at the top right there.
Okay, sure.
And then alternatively, here we go. So you can see already here, you're on mainnet right now. Here's a list of pools. The top two that are highlighted are from our team, but everything else on here is from other folks. You can filter by time remaining or sort by time remaining. You can search for specific pools, find reward rates, different types of pools, or by TVL, etc. then another approach, if you click on distribute in the bottom left, so that would be like the discover page. Over by the dark mode button on the left side, you hit distribute.
Sorry, I just really had to trust dog and see if there was really a dog.
So you can see this is like if you're a manager, you're a creator or a project, this is where we would go. You can hit create pool in the bottom right.
Sure.
And it's going to ask you to connect to a network. But basically, you can see the form. It's 1, 2, 3, 4 steps. Fourth being the confirmation. You go in, select the pool type, NFT staking. We have a friendly flavor of ERC20 and a more competitive, engaging flavor. It's good for gaming. You select the tokens, you select your time incentives, and then you launch, and that's it. Contract goes live. And then you can manage that pool over time and add new funding, add rewards. You actually earn GYSR. We have a GYSR token that as a project you earn by users spending it to increase their reward rates. So you can actually withdraw that GYSR that you earn as almost an additional source of income just to help with funding.
Yeah, I mean, so they act almost in a way like as like an interest fund, right? Like you're able to.
Yeah, it's interesting. So we view the GYSR token as an additional stream and an additional flow of value between the end user and the creator. So users can very easily exchange extra value that's not the project token, because no project wants to be dumping their own token early on. And this provides another way for users to pay into the system and pay back to that project without having to dump capital or dump stable coins, etc.
Yeah, and again, like you guys have been here. You said since early 2020, so you've had quite a bit of time to play around with this and think about it. And like from what I see, it's a really nice interface. I don't have a project that I own enough liquidity on Ethereum to be able to create a pool personally, but yeah, like I'm thinking, that you guys must have you must have a what do you call it? Like a test account that we can just walk everyone through the process of doing it. Because I'd really like to see it in process.
We're also live on testnet, so we have a whole full deployment set up on code, so anyone can go on and just try it. We can walk through, and even in the meantime, so we can jump back on a live stream, but I can also send you just to post in the comments or post in the description a few live video tutorials that walk through this interface and show what it looks like when you're interacting with it and when you're actually setting up a full pool.
Yeah, I mean, I'm definitely interested in checking it out, and I know that Corey as well was, and a few other people that we're involved with are too. So, but yeah, I want to go actually into World and do some gratitudes if you're down with that before you go. I don't know if you know what we do here in our little random metaverse, but we always put up gratitudes. So let's close with that, and hopefully people will come over here and check you guys out. I'm so used to co-hosting with other people that sometimes I get lost in my own. So your team, like, how big is your team, if you don't mind me asking?
So the core team is fairly small. We're about developers. We're about 4 folks, and then we have a broader team of really awesome biz dev folks and community managers that are probably another 4 folks. And yeah, we're still running a pretty tight ship overall, but it's been have had a very helpful community. Obviously, a lot of cool projects around us that are providing feedback, testing things out. Yeah, it's been good.
Cool. Yeah, so this might be a little bit strange to you if you don't know who we are or what we do, but we come in here every episode and we put up gratitudes on the wall. And so I'd like to ask you, Devin, from GYSR, actually, what are you grateful for?
Sure. So I'll say I'm grateful for the incredibly supportive Geyser community. I don't know if you can fit that here.
Yeah. I'll just do this. Devin.
Say for the awesome. Yeah, amazing work.
What am I grateful for? I'm the writer, so my gratitudes are way too long. Jimmy D is grateful. To meet new owners in the space.
Awesome.
Directed mostly at you. Yeah. So, I think it's a really amazing place that we live in this crazy blockchain world that's encompassing all of these new ideas, whether it be from DAOs and DACs to DeFi to, decentralized aspects to, figuring out a way to make sure that we're all safe and able to, live our livelihoods to the best of their abilities. I mean, again, this might be a little bit, disconnected from you as a person, but one of the biggest projects in the space where we reside over in the Wax community is our planet. And, the Weekend team are based in Ukraine. And it's really quite humbling to realize that at any point in time, a lot of the places in the world that we live in could just go into a disarray of madness. And I think what teams like you guys are putting together when it comes to DeFi, when it comes to be able to manage your own property, is going to be life-changing for so many people, right? I think NFTs as well. What I'm excited for is NFT land deeds, so that, when a military coup walks into a country in Africa, and everything is said and done, however long it might take, you can go back and you can provably get your land back, because that doesn't always happen in a lot of these places, right? And we're really lucky in the West. And I think people that grew up in the West, like yourself, that are able to take these concepts that we hold so dear and put them out there into the world on the blockchain, so that the majority of the people in the world can benefit, no matter where they grew up, no matter where they came from. I think this is really important. So thank you, Devin, for all that your team and you have built. And I'm really excited to have you back again and get the walkthrough on how to use it. And good luck with everything. So
yeah. I guess one closing takeaway. I was at Ethereum Denver last week, and I think to your point on crypto and Web3 being a lot bigger than ourselves, a lot bigger than anything that we're even individually working on at the moment. The theme, of course, across Web3 and crypto is human coordination. How can you coordinate humans in a better, more efficient, more fair and open way? And it was really cool to be at a tech conference where that was actually really at the forefront of everyone's minds. I think that a lot of other tech conferences, not to discredit other industries, but I used to work more in I think everyone in tech worked in something else before crypto, right? A lot of times you get lost in what you're doing. You're focused on the technology, you're in the weeds, you're focused on a very specific mathematical implementation of some specific problem or addressing some very little thing, and you kind of forget why you're even doing it. The Ethereum community and the broader crypto community is what I've seen so far has been incredible about staying focused on the high level the mission, why solving this general problem of human coordination is really important. And that's cool to see. And I think it's very exciting for the future.
I agree. Yeah. And it's really, yeah. The world that we live in a decade from now is going to be so crazy compared to the world that we, compared to the world that we live in today. So,
Definitely.
But yeah, and I mean, it's only been 2 years or 3 years since you guys have been going. So, but yeah, I mean, I got a jet because I screwed up and double booked myself. But I will see you again, Devin, sometime. And thank you. I don't know, maybe you can give us a chop because that's how we do it here at Uplift Land. We chop ourselves out. Thank you for joining us, and we'll see you all next time.
Thank you.